if I need to, let's see. We could be live now. Hello, guys. Check. Yes, we're live. Very good. Okay, guys, welcome everyone who is watching. As you can see, we do have a special guest here, Simon Dixon from BnkToTheFuture, one of the investors in Celsius, and lately also kind of an spokesperson for this movement that you yourself, Simon, has started with how we can build a future for Celsius, community-driven future. So we will be discussing that. We also have some news, of course, today about the bankruptcy filing. And most importantly, I think we will go into the Q&A from you guys, from the chat. Also, before we start, you can go to YouTube and you can just search Simon Dixon Celsius, and you will find many AMAs that Simon has done the days before this live stream. So you will get a lot more backstory and a lot more insights there. And in this video, we'll be mostly focusing on the future. But Simon, for people that don't know you, please introduce yourself, and maybe you can explain a bit your role in this Celsius saga, especially with the recent developments.
Yeah, sure. So my name is Simon Dixon. I've been on your channel before. I think the last one was the pandemic, maybe. We tend to only do this when we're in disasters. But so I've become a bit of a crypto disaster roadshow person. But I've been involved in Bitcoin from the beginning. I spoke at the first Bitcoin conference. I wrote the first published book in the world to include Bitcoin in 2011. The way I found Bitcoin is because I was trying to create a bank and couldn't create the bank that I thought would be sustainable because of laws in banking. And so found Bitcoin and pivoted this business when I realized that Bitcoin was creating a way for people to own their own money, spend their own money, and have a fixed supply. So as soon as discovered it was digital hard sound money, started working on changing securities laws around the world. Started in the UK, and that work was picked up by President Obama, that later turned into the Jobs Act to be more inclusive for those that want to invest in securities. And we started allowing people to invest in many of the biggest companies in the industry, whether that be from Coinbase, Kraken, Bitstamp, Bitfinex, Celsius was another one we did later. And blockchain.com, Circle. So I'm personally a shareholder, full disclosure, in over 100 companies in the industry. And through BnkToTheFuture, we have 150,000 investors that invested in many different companies in the industry. So putting that to where we are now, I spent pretty much most of my life on the securities and banking regulation side, and helping people understand some of those trends. I think my video's frozen, hasn't it? I might rejoin in a second. I'll just get to that end part. Yeah. And yeah, we created the world's first crypto securities business, and we're involved in several recovery plans from companies, ranging from right at the beginning through companies we invest that I'm a shareholder in, like Kraken, that did the Mt. Gox recovery, and then Bitfinex as well, that had a hack recovery. Why don't you have a quick chat? I'll unjoin and join again and see if my camera comes.
No worries. We can do that. So welcome everyone, guys, all of you who are joining in. As you know, one of the recent developments we have right now with Celsius, which we will be speaking with Simon about as well, is about the bankruptcy, which they filed for today. I will share the screen in a second here to show you guys. Let's see, still figuring this. I'm a bit rusty, as you can see on the streaming. It was a while back, so excuse me for the hiccups, but there are not many hiccups. So today, Celsius, one of the crypto's biggest lenders, files for bankruptcy. Chapter 11, bankruptcy filing in Federal Court of New York. And this is very, very key because it's a new development that we haven't seen before. And I'm very curious to ask Simon what this means. Ask Simon what kind of percentage chance there is that the funds will be returned, and how much of that. So that's one part. Another part is, of course, Simon's experiences with recovery plans. As he mentioned, he was part of the Bitfinex recovery a few years ago when Bitfinex was hacked for a lot of money. And instead of going under, they issued a token to their users and said, listen, you don't get the money, but you get this token. and if we recover, it may moon because it is connected to our success. This is at least my understanding. And guess what? It did recover, and it played out very, very well for the depositors. All right. So that's one alternative. And now Simon should be back. Check.
Okay. Yeah. Sorry, I had two windows open, so it was freezing. We should be good now.
No worries. Yeah, I recap basically what you said with Bitfinex, and maybe we can double click on that because I find it fascinating. So Bitfinex was hacked a few years ago, and it was hundreds of millions, right? Or 65 or 650. It was a lot, and they issued a token.
Yeah. So here's a very important lesson, and I think we should really focus on lessons because that's how we can focus on the future. But this is the difference between a token and a security. A security comes with certain rights and tokens don't. So when you look at some of the recoveries like Luna, they just issued a new token and the new token's just as shit as the old token, okay? Now, in disaster recovery, we focused on securities. So as a securities business, we take processes that work in the normal traditional world and apply a bit of crypto innovation to it. So the way that we did the Bitfinex one is we saw the Mt. Gox disaster. That was in 50,000 Bitcoin that were missing. Funnily enough, the backstory of that is that Jeb McCaleb, the developer behind the XRP cryptocurrency, Ripple, sold Mark Capellas an exchange, not disclosing that there were 80,000 Bitcoin missing. And that led to accidentally running a Ponzi scheme that later, didn't have enough Bitcoins to match those deposits with bad technology, more hacks, and just a very, someone completely in over their head running a multi-million-dollar financial services company. So we see that story repeating. Okay. Now, the thing that happened with that is immediately we had to lobby as a community in order to make sure. So this was done via Japan equivalent of bankruptcy and liquidation proceedings. But all of the assets were put into a trust, and then a trustee was managing those funds and reaching out to creditors. And we had to lobby the industry so they didn't sell the Bitcoin because the company went into bankruptcy. It didn't have enough money to meet its obligations to its creditors, which is people that have deposits. However, as the price of Bitcoin went from, I think, we were at $120 to we're still, 8 years later, a peak of $69,000. This became out of bankruptcy. And then obviously hard forks came along as well. So there was all this money from hard forks that could be used in order to pay certain fees, and Bitcoin bailed out. But the challenge with it is it took 8 years and forced everyone to hodl. But if they had sold that Bitcoin, it would have been a disaster for the industry, would have crashed the price like crazy. They had over 70% of Bitcoins that were being traded at the time. And that was really because Japan took a favorable opinion on Bitcoin as legal tender. They were the leaders in the industry at the time, and a very strong history in Bitcoin. Okay, so that was experience one. It's very important to make sure that you don't. Let's translate that to today. Today, when all these companies are going bust, they're using not, for example, Celsius has a UK company parent and a US subsidiary, but they're using US bankruptcy because if it was UK, it would just be sell everything and it would be a disaster for the industry. It would create our Lehman Brothers of crypto moment part 2, which would create further cascading liquidations as they have to unwind all these Bitcoins at any price, and just a disaster. But they're using US instead because US has these things called Chapter 7s, Chapter 11, and various other things. Chapter 7 is the equivalent of what I talked about, where you're forced to sell everything. It's a disaster. Everyone gets their assets sold at the bottom. It crashes the market further, and it's just no good. In this scenario. Chapter 11 is you do a reorg. Okay, so now let's look a little bit deeper. When Bitfinex got hacked for 119,000 Bitcoins in 2016, just before the 2017 bull market, this was, a disaster. They were valued at approximately $72 million at the time. Now, that was today in DeFi world, that's just a rounding error on a smart contract. But at that time, that was systemically risky for the whole industry. 72 million was insolvency. But what they decided to do is act very differently. They had a very experienced team that essentially put together a plan. And that plan was immediately on day one, suspend withdrawals. Immediately on day one, tell people the size of the hole. It was a bit easier then because you just had Bitcoin and dollars and there wasn't all these other things and crazy things and DeFi contracts and collateral and all of the other things that have happened in our Lehman Brothers of crypto moment. So it was a bit easier. So from day one, they said, right, we do not have the money. Here's the choice. We're either bankrupt or we haircut all of your deposits. And so they took about, I can't remember exactly, maybe 30% of that deposit away and replaced it not with a token, but a security. That security was built on top of Bitcoin, and it was the first security token in the world that I know of, other than the illegal ones that happened prior to that on colored coins in 2012 and things like that. But that was the first one. Now, what this token did is it didn't say, let's just create a pump and dump market. Let's hope that they get some adoption and some governance structure and everyone starts using the token. And then we have to rebuild. It was essentially, it said, this is $1 of debt. We got $72 million of debt, 72 million tokens. So everyone logged into their account. They could start trading again. And they created a market for this token, this $1 of debt. Now, this $1 of debt, which had essentially a promise to repay from Bitfinex, will give you $1 for anyone that owns this token in the future. And if you don't believe we're going to recover, dump it. If you believe we're going to recover, keep it. Or if you want to be more speculative, buy the token from those that want to dump it. And so immediately the price crashed to 30 cents. And people started to buy this token. The most loyal customers at Bitfinex decided that they fancied a future for Bitfinex and they'd be willing to buy it at 30 cents if it meant they could have $1 worth of debt. And so they had that 70% upside in the token. Now, another key part of it is you needed a way to get that debt down. And so what we did at BnkToTheFuture is we, through our securities business, we launched a pitch for Bitfinex, where you could purchase shares in the company at a discounted valuation. And so essentially, there was only one way of buying those shares, though, and it was paying with the security token. And so you could buy a token for 30 cents and get $1 worth of Bitfinex equity, which would give you a 70% upside if the company survived. And so after a period of time, a bit of luck happened, and there's obviously risk in this. Tether started to get traction. Binance launched. Binance didn't have any banking at the time, so it relied upon Tether, and it became a crypto-to-crypto exchange and got really fast growth. The industry started to grow. Bitfinex started to get lots of trading as the bull market came along. It started to pay down some of that debt. And the token price started to go up, and approximately $55 million was converted into equity. The rest of it was repaid, and very quickly, very decisively, by having effective communication, this whole process was done and dusted within approximately 3 months. But then we had a secondary market at BnkToTheFuture. So the equity was the first one that we launched on our secondary market. And as Bitfinex became so big of an exchange and Tether grew, the price of this equity went up to a peak of $16. So from 30 cents to $16 over time, long term. And Bitfinex took all of the profits from the next 2 years of the entire 2017-2018 bull market, and paid it out as dividends, and gave them rights to any hacked funds that were recovered. And recently, as you know, this year, $4 billion of those hacked Bitcoins were found from the crocodile of Wall Street. So they got an entitlement to that. And it turned out to be one of the most profitable, high-risk, speculative investments that actually rewrote history and produced an amazing result. So there's some history. Forward to today.
Just a comment. I love how you call it a free market solution, because it basically means that people who believe in Bitfinex, or in this case, let's say that Celsius did something similar, that there is a big hole, maybe there's $1 billion missing, you get these debt tokens, which will be $1 if the company survives and can repay you. But you don't have to hodl it if you don't want. And there are other people that believe in Celsius that will buy it from you. That's what happened with Bitfinex. And the price did reach equilibrium, like you said, at 30 cents. But you always had a choice. Do you want to take those 30 cents, or you want to hodl them into the future when they grow? And as you say, it basically grew to $16 if you converted it to the shares via BnkToTheFuture. So that is a free market solution. And is that basically what you propose for Celsius? And is it even possible now that they entered bankruptcy?
Okay, so now we move to the Celsius situation. So a little bit of background, full disclosure. At its peak, me individually and across a few accounts, I have tens of millions on deposit at Celsius. I want to disclose that because it's important. I'm also a shareholder in BnkToTheFuture, the major shareholder. We put together a funding round for Celsius in 2020. We invested, BnkToTheFuture Syndicate invested approximately $10 million, and Tether invested about $10 million as well. And so there was a $20 million funding round in the Series A. All of this is important to describing where we are, because it explains why we had slightly different solutions and recommendations. The way that came about is that I was looking to go to New York as the DeFi market was starting to heat up, and started to see that this model that, before the ICO boom, I invested in a company that invented this model. I'm not going to name who that company is because it's certain NDAs and discussions. They invented this model based upon putting a user experience on top of Bitfinex's transparent peer-to-peer lending order book. So Bitfinex actually created this market where you could lend your Bitcoin on an order book and it would match them up peer-to-peer. So if you wanted to lend your Bitcoin and receive interest, you could be matched up with someone that wanted to short for margin trade, and the market would match up, and it's peer-to-peer. That's very important in the Celsius story. A company that we also invested in at BnkToTheFuture called BSave put a user experience on top of that order book, so it kind of looked like a savings account. And this very same story happened because Bitfinex had the tokens missing, and BSave was a savings account, and suddenly they got haircut, and they had to explain to their depositors, "Oh, there's a haircut," that situation led to them going down. And ironically, a company bought them called Celsius, Celsius. So then I decided to go over to New York and meet the team behind BlockFi. We wanted to do a funding round for BlockFi. Fortunately, Zach, the CEO, wanted to do it, but the VCs said, no way, we'll put any money in, don't allow BnkToTheFuture in. And unfortunately, they got wiped out by FTX recently. So we dodged a bullet there. We ended up going to meet Alex Mazinski. He told me this vision, a very persuasive person, around this ability for a person like me to not have to sell their Bitcoin, take out some dollars so that I could, purchase a house or whatever I wanted to do without selling the Bitcoin. And there's certain tax advantages depending on which jurisdiction you live in to that. Not tax advice, not legal advice, not financial advice. I should say all those things as well. And then that's when we did the funding round for Celsius. So, then fast forward to where we are today. Very unfortunately for me, I was taking, during the whole lunar blow up, you'll notice if you go back to my YouTube channel, I was in hotels, and I didn't tell anyone at the time, but it was very clear that my father, who I was very close with, was going to pass. And so I was traveling, and I announced on my Twitter that I'm not doing any more videos. I'm taking a time out. I just need to, mourn what was happening in my personal life. And this whole lunar situation came along, and started to realize that Celsius had completely deviated from the model that we originally invested in. It appeared that this is no longer peer-to-peer. It felt like it was speculating on multiple things. So then people started to send me videos saying on AMAs and all these things. And then I started to, over this period of time leading to where we are now, start to see more and more things that slightly concern me. So I called up Alex. And by the way, sorry, another bit of the story is we were building a security law compliant version of this through a retirement plan, because we believe that in the future, all these things are going to be securities, and we'd worked over a decade on security law compliance in the crypto industry. So we were building a security law compliance. And the reason for that is because we started to think that this was more like a high risk security. They were actually investing in multiple things. That was a complete deviation from what was disclosed to us as the business model. And then suddenly they were talking about things like doing mining. And I was like, well, that's a collective investment scheme. That's a hedge fund. If people are investing in that, then there's completely different disclosures. You need to do suitability tests. You need to do everything we do at BnkToTheFuture. You need to have a prospectus. You need to disclose that to investors so they understand the risk that they're investing into. And so I immediately called Alex, and Alex told me that everything's fine. There is no issue. They're not exposed to Luna. We should put more money in and start pushing more. And at that stage, I started to, feel that, we were looking at doing their next funding round, the Series B. When we were doing the Series B, I started to speak to my due diligence team. And I said, why is this round not even live yet, before this? Why didn't it go live? And they said, well, for 8 months, we've been trying to get transparency on certain regulatory questions we were asking and financial questions we were asking. And we were just not getting the answers that we needed. And so at this stage, I went to Alex again and said, look, they suspended withdrawals prior to this. And once they suspended withdrawals, I knew that there are big, for example, we have within a regulated company, you have things like conflicts of interest policies. So if I hold funds at Celsius, I have to disclose that in my internal conflict of interest policy, which we have to file with our regulators so that they understand certain conflicts of interest. And this is how regulations, this is why people confuse good regulations with bad regulations. I believe bad regulations are all of the anti-money laundering stuff. It's not good for consumers. It's not great. But investor protections, when you have centralized companies, are designed to support transparency in situations like this. Support a scenario where you wouldn't, at BnkToTheFuture, if someone invests, we have to make sure that they take a quiz so that we know that they understand the product. We have to make sure that they're only investing 10% of their investable income. They have to prove certain things. And this is all designed so that you don't have a scenario like I realized after the deposits. I was getting thousands of direct messages at a time when I was in completely emotionally charged, mourning the passing of my father, from people that saying I'm suicidal. I put all my savings in Celsius, and I was like, who's put all their savings in Celsius? Who's doing that? This is a high risk, and you can see some of the AMAs. People were asking me questions about Celsius, and I was saying, this should only be a very small percentage. This isn't Bitcoin. This is Bitcoin put at risk. That you should be risk managing, and and it should follow many of these different regulations. So this is when I realized, unfortunately, I can no longer mourn. I have to come out. I immediately told them the Bitfinex plan. Alex passed me over to Citibank. Then I presented it to Citibank, and I knew this is going downhill.
But so that's where you told Alex about the Bitfinex plan and explained that we can do a debt token, debt security as a token, and we can do this free market solution. And you were then told to pitch this to Citibank, and of course that will never go anywhere. And did you speak to them?
Yes, I spoke to Citibank, and I know how Citibank works. I used to work in investment banking before Bitcoin. You could want to do an idea, you could want to take some risk, and then it goes up to the executives. And a year later, after doing all the messing around, it comes down from the executive saying, why would we mess around with something like that? And so that's immediately what I knew was going to come from that. There were three things that really made it work. The Bitfinex scenario. The first was effective leadership. The leaders, they came out, they put their hand up, they communicated, and disclosed what the situation was. So leadership is another thing. The other thing is, rather than doing it via a token, they did it via a security, so that there was actually underlying value rather than just a promise of some crazy token that has no bearing on reality. And the other thing was, using pristine collateral, and also using a regulated institution to do that. So at BnkToTheFuture, we could do securities legally. And so therefore those three combined, and I told Alex about that, put it over to Citibank. And then I started to get a little bit suspicious why communication wasn't happening. Withdrawals were suspended. Everyone else was acting decisively. I went around the whole industry to figure out who else was in this scenario. And they were acting decisively. They were communicating, they were fessing up, and they were following, procedures that would allow this to happen. At this stage, I started to take an opinion, and people started sending me messages after message of Alex on AMA after AMA, going on people's channel, telling people everything's fine, saying it's guaranteed by a $2 billion balance sheet. And that turned out that was Cell token that could crash 90%, and that it's safer than a bank, and these returns are guaranteed. And I just realized this person is not appropriate, not fit and proper to run a financial services company. So I had to go public at that stage. I put at BnkToTheFuture, we put together a web page because we put together a philosophy. And the philosophy was, if depositors are not made good and effective communication is not done, then these shares are going to be worthless. And so we put together a plan, and we started to communicate to all the community and go on all different channels. Here's what's gone wrong. Celsius started as a peer-to-peer lending model. They deviated it, and they became an illegal security where you were investing in essentially Alex Masinski's ability to manage a portfolio. And then some hacks happened and things disappear. And it turns out that there are some uncollateralized models. These are all my opinions, and it could actually be under collateralized, where the retail were collateralized and the hedge funds were under collateralized. And at the extreme, this is an unlicensed bank, a fractional reserve bank. And then at that stage, I just knew I had to make a decision that I've never made before in my life. For anybody that knows me, I had to choose between educating depositors on the situation, because I knew that the only way to resolve this is it was Depositors versus Alex Mazinski. And so I started to reveal information that would help depositors understand what this situation and how serious it was. I got attacked by the community. And I just relentlessly just went at it, did AMA after AMA after AMA, to let the community know that there is another process. And the process is the disaster case is TradFi takeover. It moves into Chapter 7 and we create cascading liquidations and kill the industry. And many people lose their life savings. Those people that were suicidal, and there's really heartbreaking messages. It just hit me in a way where I had to act in a way I've never acted before. That was the prevention. And then I put together a team of the best team that money could buy, the best lawyers that have been involved in all these processes, demanded transparency on the financials. And I realized that the way that this company was being organized was hiding things that I thought were fraudulent. And so I started to put together my opinions in the best way that I possibly could to help people prepare for what comes next, and realizing that there is a future if you can move this into something called Chapter 11, where you have to solve 3 issues. The first issue is you need leadership that are capable of being regulated to run a financial services business and open as fast as possible. That requires companies that have spent over a decade securing licenses. And I went out to all of the other companies that had the licenses and said, let's create competitive bids here. You might want to be involved in this process. I went out to anyone. I put together a syndicate of people that said, if you can give me the finances, we've got up to $6 billion syndicate to solve an issue, but I need transparency on the regulatory situation and the finances. So I started lobbying to make that happen, and then realized that firstly, you need effective leadership. Secondly, you need the regulations, and you needed to do complete transparency on the finances. And then you needed to put together a business model that had a future, because I said, you will never hear from Alex Mazinski again. You will only hear a careful worded and drafted letter from a lawyer that will be signed by him. And everyone said, trolling, FUD, bank run, all this stuff. And I just got attacked, but I knew I just had to answer people's questions while my team was working on executing an effective plan so that we're ready, so that if it moves into Chapter 11, there is a way of recovering. And the first one was we started to realize that the team were moving everything around and all the on-chain transactions were happening so that they could get in a position where they knew the size of the hole. The community were cheering, saying, Alex the hero, and asking me to do crazy things like buy sell tokens and combat short sellers, and malicious actors were playing in a very, and I was saying, I can't do any of that. I run a regulated company. If I was even seen moving my funds out of Celsius, that would trigger a disclosure requirement that would lead to a conflict of interest. So I had to leave my funds there because I knew that this has massive consequences if there's fraudulent activity going on within this company.
Let's get into exact plan from now, because we have Chapter 11. So the worst case would be, like you say, Chapter 7, that they have to sell everything to pay back their creditors, and if they sell everything, it will crash the price. So Chapter 7 in the US would be the worst. But now we do have news today that they filed for Chapter 11. So let's get into that. And what is your view on that? Is that the correct path? Is that avoiding Chapter 7, or could that become Chapter 7? What do you think?
Okay, so there's 3 solutions. I like the number 3 today. 3 solutions. You got what BlockFi did. BlockFi essentially copied the model that JP Morgan put together before the Federal Reserve was created in 1907. JP Morgan lent a bunch of money through debt to distressed banks that had no lender of last resort, and then bought their equity at pennies on the dollars, but owned the banking system before creating, meeting in Jekyll Island and designing the Federal Reserve System that led to the fiat-based Ponzi scheme. Sorry, slight deviation. But that's the history, 1907, right? FTX did the same thing with BlockFi. So they immediately said, here's a line of credit that solves your liquidity issue. back it by a big balance sheet, and they run a bucket shop of futures trading and all sorts of stuff. So they had a big balance sheet led by a 30-year-old billionaire that made all their money through speculation and trading and all sorts of stuff. So he had all that. And then just bought the equity, wiped out the shareholders, the companies like Galaxy and all those ones that were also suffering from Luna, which was also a public company that was also exposed to 3-hour capital. And then you realize the systemic nature of our industry. Through under collateralization, we created the Lehman Brothers of crypto and the cascading liquidations and all that. So BlockFi avoided that scenario by using a JP Morgan strategy. Voyager was exposed. It turned out that they had lent 50% of their balance sheet on an under-collateralized loan to a hedge fund, but here's what they did differently. They fessed up, they suspended withdrawals, they communicated, they were a public company, they had effective systems and controls, they were used to disclosing financials as a public company. So it was, although that risk management decision was incredibly bad, it was governed by a public level scrutiny that allowed them to communicate effectively, put together an effective plan, move immediately into Chapter 11, and start engaging with those that could put together a reorg and a strategy. Then you had Celsius, and Celsius just destroyed their brand because they didn't communicate. And then everyone started speculating, and as people started speculating, the token crashed, and there was this token, connected to it, and just one disaster went to one disaster, and we realized that this brand is no more, this board no more, this leader is no more. There needs to go into a reorg where a company can come along and fix those issues. So I said, I'm one of the largest depositors in Celsius. At the last valuation, our shares were worth $170 million because they were a $3 billion company before this. And we started to see the valuations that BlockFi was done. BlockFi was like 25 million to 250 million if they meet their goals. We knew that at this stage, equity was being wiped out. What's the best way of trying to make a future for the equity? Do what's right by depositors. Figure out an effective plan in Chapter 11. Any shortfall, once the numbers are transparent, put together an equity that has a future. And so we immediately started putting together a strategy of companies that had all of the licenses, all of the operations, and a lot of experience that could create a package of equity that could do something really exciting and create a potential speculative future. The Bitfinex token model can't be done anymore because the security token market was very nascent then. And unfortunately, in situations where this company was already, multiple regulators around the world, they were due to settle with all these different regulators. They had their eyes all over it, and everything had to be done by the book. So I wanted to give them a compliance strategy done in compliance with securities regulations, lending regulations, and put together essentially a future that could lead to something that's, if we can do this together. So what's the difference between this? Well, BlockFi, FTX benefits, but FTX got the discounted valuation. Why shouldn't the entire community get the same discounted valuation? And that's where we started to think about, that's where there may be a future. And so we started immediately. At some stage next week, I will be under NDA, and one of these may be my final interview because we will putting together proposals, and then those proposals will be voted on by creditors, and those creditors are essentially the entire community. So we get, as a community, to put together our own proposals, free market solutions, build a future. So I wanted to present that future to people. And we get to solve our own stuff based upon our own solutions. And I think it really is something that will go down in economics textbooks in the future.
So with this Chapter 11 today, is that moving it closer to this future you're describing? Because that's not selling all assets, that's restructuring. So what you're speaking about, that you can put together a proposal where the community can be part of taking over Celsius and figuring something out through BnkToTheFuture or in other ways. That's basically in line what we're seeing right now with this article that we have here on TechCrunch, for example. Is that correct summary?
Exactly. So, you know, the people, when they saw bankruptcy, they thought their future is over. It avoided Chapter 7 because of the lobbying efforts that were done by the community, and everyone was attacking me for, because we believe that there is a better future in Chapter 11, and all we needed was transparency on the financials. So we needed to get those financials so that we could then take our syndicate and put together a community-driven solution that I believe will, and then, you know, put together a model of how to not make all the mistakes that these companies have been making. And we've learned, and now we need to recover. You know, and that's what we'll be presenting, that just like in Bitfinex, you whatever money is left, that can be distributed. And then how do you make whole with the shortcut, the haircut? And the haircut, I believe, we put together a few models that we won't disclose until we are able to, because they would get community vote. And we started reaching out to other companies that wanted to compete to ensure that Depositors got the best deal when there were competing deals in that scenario.
So basically what you're saying now is that they enter Chapter 11. So organizations and syndicates, they can come in and present their proposals. So for example, at BnkToTheFuture, you guys can come in and you can present your proposal for how Celsius can be restructured. And then the creditors, aka the users of Celsius app, they vote on the proposals. So is that the correct summary? And if so, how do you think it will happen? Because there are hundreds of thousands of depositors. So would it be that they do some interface in the app, or how can people watching this channel, for example, that want their coins back? And we see so many comments in the chat about, for example, Bat Superman writing, I just want all my coins back, and people before were writing. So is that the easiest way to get something out, that this proposal that you're putting together, community-driven proposal for restructuring under Chapter 11, would that be a good summary of what you're trying to communicate?
Yeah, I mean, I would have to say that this has been moving at 1,000 miles per hour, and I did put our M&A team and our legal team. And if I'm making any legal mistakes, you know, I'm learning this as we go as well, because there's lots of nuances in those processes. But the basic idea is exactly what you said, that rather than shareholders deciding under that type of model, the creditors decide, and the creditors are the depositors. And then we can put together effective solutions. And now look, when people say, I just want my coins back, I'm sorry, you know, and this is the cold, hard reality that I was trying to tell people, and doing this as diplomatically as I said. You have been completely misled and misrepresented, and you thought you were investing in a low-risk savings account, but you actually invested in an illegal high-risk security and hedge fund that may potentially be a fractional reserve bank, and one individual controlled the keys to figuring out how they were going to try and do that, and I believe that he's lost $1 billion of your money. That money does not come back. So what do you do with the rest? You try and create a future. And the only way you can create a future, I believe, is Celsius's brand is over. The board needs to be people that can be regulated. And we need to put together a model that learns from all of the things that went wrong here. You know, we spent the last 10 years. And if anyone else wants to come along and put together another model, we as a community can put together that free market solution.
There is a comment that Alex owns most of the company and he's not gonna want to do this, but he has to do it, right? He under this Chapter 11, which they are entering today, this bankruptcy, they have to show all the proposals that come in to their creditors, and creditors vote on the different proposals. Is that correct?
Yeah. The whole point of Chapter 11 is it needs to get sign off from the court and vote from the creditors. And the existing boards that have done this don't get to make those decisions other than supporting a new committee. And that committee is put with a specific goal to try and get what's best by their creditors. And what happens to equity? It gets wiped out. So as the largest, you know, as he is the largest equity holder, Unfortunately, there's only a future for equity if you can create a new equity that hasn't got all the legacy issues and all the fraud and all the lawsuits and all the cases and all the misrepresentations and all the things that led to innocent victims losing their money as a result of immoral, unethical representations from people that are completely in over their head around how to ethically manage a financial services company.
And someone says here, crypto researchers, he's saying that Simon's proposal is a new business and not the reconstruction. And what you just said, that there needs to be new equity because the current shareholders and the current people in charge and the board, that they don't have the trust. I've heard you say that in other AMAs, that it needs to be change of leadership, like even the brand needs to be changed, you said. Even the brand has lost all the value. So what would be that proposal? That a new entity is created with professionals in charge and they buy up all the remaining assets? Is that it? And everyone who is a creditor could get ownership in this new entity. Is that a good summary?
I don't want to give, until it's ready for submission, but you can guess from all of my history what types of things I would be thinking and connecting the dots. We have the team that invented this market. We have the longest standing securities business. We've funded different banks that are crypto banks that have, all of the permissions needed in order to operate this model. I'm a Bitcoiner. And we know what we think went wrong is just shit collateral. What went wrong here is essentially you have Bitcoin, which is digital hard sound money. That's volatile, but it's pretty clear from a Bitcoiner or someone that believes in that future that Bitcoin's going nowhere and it doesn't change much. So if you build a peer-to-peer business based upon Bitcoin, then you're just managing volatility, right? Then let's go a little bit further down the risk curve. Well, you have Ethereum. Now, Ethereum is this uncertain thing that is switching from proof of work to proof of stake. They said 7 years ago they'd make the switch, but 8-9 years later, they're still trying to do it. And so you have this proof of stake model, which is if that proves that it's going to operate and work, then DeFi is more appropriate for that type of model. Then you have stable coins. You go a bit further down. What did we learn from UST? The Luna Terra, whatever it's called. When you back something by a shitcoin that has zero liquidity, that can wipe out very quickly, can be subject to speculative attacks from futures exchanges and all sorts of stuff. And if you can't pull out the dollars, you can't maintain the peg. So dollars, you need stable coins, the way you can actually pull out the dollars when the peg is done. And if you go further down the risk curve and start doing shit coins and stakes and things that don't have as much liquidity, you've got this cascading risk profiles where you're managing all of these, like 100 children are all running around that are forking and then they're going over here and this one's having that issue. Right. And then the central banker that created Terra is coming along and saying, I'm going to launch this new token. And that is the issue. You just got to keep it simple, get it back to a good idea. People hold pristine collateral and that pristine collateral that they don't want to sell can be, used if you can manage those risks effectively and you can disclose and you can only sell these products to people that are suitable to invest. And that's when we've already been applying for the investment banking licenses, retail securities licenses, and we've been doing it for high net worth securities for a long time.
Yeah, and I think it's clear that you have the compliance and the experience and leadership, like you say, in place in order to take this further in basically a new company with back to basics, back to the original idea. But let's focus more on the situation that people are in right now. We get a lot of messages, Frank, for example, saying, please no equity. But the way I understand it, because it's not possible to do that $1 debt coin anymore, security coin. So the only way now is that you basically become a shareholder of something, whether Celsius now or some other entity that buys Celsius or somehow merges. Is that correct? That basically you are now shareholder of something that hopefully
We'll do the number 3 again. You are the company was not disclosing that it was insolvent. That's different from illiquid. Illiquid meant that they had some money tied up in a smart contract and they couldn't access it without realizing a loss or Ethereum moving to proof of stake.
There's no money there. There is no money there, so you can just become
the money's gone.
It's gone.
Yeah, the money is gone. So you can only effectively replace the money that's. Sorry, let me be very clear. There is a percentage of the money that's gone, and the first thing is to make sure that you figure out what those numbers are, so that you can figure out how much those people have, and they're the creditors. Then you need a business model that that means that they don't pull everything out in one go and have a choice. So you have to replace the haircut. And that can only be done in a few ways. Either a shitcoin, which is what Terra did, a debt, and therefore an investor needs to put up that money, and then there needs to be a debt model, or an equity where you get a stake in the future of the company if it recovers, or another entity. I don't know any other magic voodoo to create money other than that.
Yeah, exactly. And I think it's just important that we state that, because so there's no like the money is gone. Part of it is gone, as it got speculated away in different things, and because, as Simon said, instead of just doing lending over collateralized with a sound business model, it became speculation. Just like you guys have your altcoin bag, Celsius basically started the same, different DeFi, different altcoins, this and that. I don't know the exact details, but on a big picture, this is what happened. And the money is gone, and the only way forward now to get anything is that you become a shareholder in the entity, or there is some debt that the entity issues you a debt and says, okay, we lost your money, but if we're successful, we're going to repay you in the future. So that's...
And sorry, there is one more alternative. If the proposals are not liked, then Chapter 7, and we create cascading liquidations in our industry.
Right.
A bunch of millions of people lose their money. Everyone gets pissed. And Bitcoin comes along and they buy a bunch of cheap Bitcoin if they're doing a hodl strategy at the expense of innocent people that were misrepresented. I don't think that's a good solution.
Exactly. So and the final one is that is Chapter 7, which means that we sell everything we have. You get what we could sell, and that's it. And that will, of course, crash all prices, as it's a lot of Bitcoin. Yes. All right. Now let's go into this discussion that Celsius got attacked. I saw some people writing about that. What do you think about that? Because basically there is this conspiracy that because Celsius pulled out of UST too early, that Bitfinex got after them. I don't know the details there either, but this is what Twitter says anyway. And what do you think about that? Is it an excuse even? Because if you have a sound business model, you cannot be attacked. If someone shorts your token or tries to crash your token, it shouldn't affect your whole business. So in my mind, it shouldn't be an excuse. But what do you think about that?
Two things. Again, this comes down to leadership and positioning. So the attack was, the story goes that there were Celsius and some other companies like 3 Hour Capital, and Voyager, or whoever, these different large entities that had exposure, Galaxy as well, to Luna, and they were meant to not pull out unless they did it in a coordinated way. The story then goes that Alex, now if you look at the leadership in history, if I could summarize what I learned after going really deep into some of these things that were said, Alex had a mission, which was to be bigger than Coinbase, and ego got the better of him, and he just wanted to be bigger than Coinbase. He wanted to grow faster. He wanted to have bigger numbers. He wanted to have bigger this. He wanted to tell everyone that they're scams because they're charging fees. And Alex made a lot of enemies as a result of that. And so by having those enemies rather than forging alliances, it led Celsius exposure to such activity. Now, the conspiracy theory or not, I don't know. I haven't had time. I don't go into all these short things, and I don't mess around with trading. I'm just a simple long-term investor based upon simple principles and protecting, and a complete risk manager to protect from when I'm wrong. But the FTX then, could have been not upset about that because of the hedge fund that they were invested in and the exposure that they had. And there's that. The other thing is that it can only expose a weakness if you've got a weakness. Now, this, on the AMAs, Alex was telling people, it turns out, the FT reported, to buy sell tokens while he was selling sell tokens. And then people were borrowing from their sell tokens and getting out a loan and buying more sell tokens and receiving their rewards in sell tokens, which, by the way, is a security because it was filed with the SEC, where he disclosed to the SEC that that's a security. So any cryptocurrency exchange that is trading sell token is currently trading an unregistered illegal security, because it was told that it was a security. And this was the foundation of them saying this ginormous balance sheet was there. This is such a bad misrepresentation, and it's the Luna story that took the stablecoin down, because it's collateral behind these things. And then you can't pull out money at that scale from a low liquid security token that's meant to be a crypto that was listed as disclosed as a security, but then illegally traded on cryptocurrency exchanges. This is what happens when you have incompetence, those leadership. Now, that then led to, here's the next conspiracy theory. Earlier this year, I was in El Salvador with the El Salvador government, working on how to put together securities laws that would allow Bitcoin as legal tender, with a gentleman called Max Kaiser. Now, Max Kaiser I met at the very first Bitcoin conference in 2011. We've had multiple investments together. We invested in many companies. We've done things together over the years. And he invested in a company called Swan Bitcoin. Now, Swan Bitcoin started to expose the weaknesses in the model. And then everyone started saying, it's FUD. He's trying to create a run on the bank. He's a bad actor. He started to get, lots of trouble. Alex would go on channels saying, unfollow him. He's a bad actor. Your money's safe. We've got this. It's guaranteed. We got that. And just made complete misrepresentations. And then Max Kaiser then came along. I did not have one conversation. As a rated institution, I know that I can't, this will all come out in court if anyone wants to do it. I did not discuss Celsius with them once, because I started to see that they were tweeting these things independent of anything. And then people were claiming that this was a coordinated attack. And then when I came out, they started saying, trying to put together all these conspiracy theories. And then they were saying the way to do this is you've got FTX shorting the coin. You need to combat it by buying the coin. And now I was saying, I'm not touching a coin. You do not want me to be market manipulation claims, because I'll be very ineffective in putting together a recovery solution in prison. And then Alex, this is when I really started to get peed. Sorry to use a British word, pissed. He invited me on the board. And from my perspective, he did that to shut me up so that I'd be under NDA and take my reputation and my brand and my company down with me, so that I end up with all the shit managing this. And I would have to disclose that to my regulator. And he did not think for a second about whether that would be an ethical thing to do. And so he just tried to get me on the board to fix his mess. And at that stage, I started getting incredibly aggressive, because I believe that this is, a very unethical way, and we would never hear from Alex Mashinsky ever again. And people needed to know.
And people are saying in the chat that you should take over Celsius, but you're not interested, obviously, because like you say, it's it's too bad. It's impossible to save, and you need NDA. So basically,
Celsius
the only way is to have another entity.
Celsius has, an incredible list of regulators that say this is an illegal security, that are investigating every single thing. There was fraudulent activity, there was movements, there was all sorts of mismanagement, malpractices that we've seen. There was misrepresentations. There is no recovering that company or that brand, from my perspective, unless they can put in, what regulator is going to say, right, this needs to be signed off and relaunched within an effective period of time so that we can reopen deposits. And we think that they're completely appropriate under this company. That's going to take years. Yeah. These things take years in discovery. So you're not going to reopen that company.
It needs to be a new entity, but at the same time, what is the value there? Why not just open a new entity without, from scratch? I know it's the only way for depositors to like come together and create something new, but from your perspective, what is the value that is left in the Celsius brand, company, balance sheet, customer base? Is there any value at all right now, or you think it is basically zero? And
No, there is an amazing thing. The community and the depositors. The depositors deserve the opportunity, and I'm one of them, and I'd rather have my deposit in a company that I'd be willing to invest into because I liked what the original business model was. And I believe that there is a future in that business model. You need to combine it with securities and you need to manage it well. And I'd rather leave my deposit in that future and allow others that believe in that future to get what they really believed in. Because Alex actually had some really things that I actually lived, philosophy, do good, then do well. It turns out that was something he says, but I've lived that shit. I delayed a lot in order to support this industry. The banks are not your friends. I've been exposing banks for what they are for over 2 decades now. And so these phrases, this community that bought into this just needs to be re-represented in a compliant way so they understand what they're getting into. We even created educational products that we've created security.
But the community is wrecked. I mean, that's that. When you say that all depositors and the community, well, what is the value of that? Because it could be a value if they start depositing new funds in the new entity, but they don't have funds. They want their funds back. So what do you think is it that it gets adoption faster than if you would create a new entity from scratch, so that I and people watching, we understand why should we even try to save this instead of doing something new?
Because there's millions of depositors, hundreds of thousands of depositors. We built technology that allows us to distribute shares to those people. And if they want to continue, once we've figured out how much they've got, if they want to withdraw, they go away. But if they got a vision, because they're now shareholders in a new company, and like to explain a bit about that vision, but if they are then now shareholders, they're self-interest, and they could take some money away. And if they think that the company is being managed well, then they could support their own shares in order to try and become something valuable. This is where a bit of creative thinking, if we can get the elements right of regulations, leadership, and pristine collateral, then there's a way of, I believe, just like with Bitfinex, of recouping. And those that just think, I'm out, they just get to walk away and let the market choose. Let the market choose the solutions. But let's bring solutions. Let's get together as a community, and let's see. There was good things about that, and so yeah, that's what I'm here to do. That's why I'm here.
Right. But also this simple operation of lending Bitcoin and having over-collateralized Bitcoin, it is possible to do on ETH with smart contracts, and that's what we've seen. All the centralized entities, Voyager, Celsius, BlockFi. Nexo, I'm not sure the status there, but they suffered, and many of them got barely saved. But DeFi, when you look at Aave, Compound, and others, they are working fine. So maybe the bigger question is: do we need these services where you deposit somewhere when it's not on chain? Have your mind changed anything as DeFi has grown? And isn't this a good example why it should be DeFi and not CeFi?
Exactly. Now, when you use DeFi, you have to be a certain level of sophistication, right? You have to be able to own your own key. You have to be able to, execute a smart contract. You have to be able to buy some Ethereum or whatever it may be. And you have to go through an educational learning process. I would argue that type of person, where it transparently says, if something goes to this price, you will be automatically smart contract margin called, would be a more sophisticated person. What went wrong with Celsius? They took that concept and they said, let's take out all the benefits of DeFi, which is the education, understanding what you're investing in, transparency, disclosures, sophistication, suitability, those types of things. Let's take all of that out and let's put on a lovely little app where no one has a clue what they're investing in. And then you get the worst of it, which is centralization. Now, centralization is a benefit if you are, managing it with the correct disclosures, the correct compliance, and so you can have these two markets. But taking the benefits of DeFi and obfuscating it and hiding it, where it's managed as a fund, means that you've got all these cascading risks that nobody in the world is qualified enough to manage at. Look, we've seen this in traditional finance. Long-term capital management, the smartest people in the room, blew up the precursor to FDIC, which almost took down the entire banking system, that created government bailouts that were used in 2007, that led to the creation of all the Ponzi scheme that we have. We've seen all of this before. The lessons are learned, but no one's learning them. And they think every cycle that we come along, it was just, I released a slide before this where I said, you've got this ICO boom and then regulatory crackdown. All of those are securities. You've got this yield and DeFi. All of those will be securities. And so eventually you need on-chain security law compliance, and you need security law compliance in the centralized way. There's only a few things that have been created here. You've got Bitcoin, which is digital hard sound money. You've got stable coins, which we've proven if they're backed by dollars, then you can maintain the peg as long as you can prove those dollars are there. And then you've got a bunch of securities that can happen in a decentralized way or a centralized way. I was trying to tell everyone the next boom market is turning all of that innovation into decentralized securities and centralized securities. And then we can move forward as an industry and recognize what we're doing here, and then get ready for the next cycle where everyone comes along and forgets the lessons of the past, and we have to learn this whole lesson over again.
And so there is this Celsius custody entity, and we have Dante asking in the chat about that. Does it even matter that there are different entities? There is Celsius, mining, custody. Is there any point in this split? What do you think?
Well, the reason it became important to me is because when I realized what was being done in preparation for Chapter 11, is that, and this is where I started disclosing my beliefs that people got very offended by, is that it was a mechanism to hide the criminality that was happening in the main company by creating two separate companies where you could disclose the financials, and the disclosures were very bad, by the way, where you could disclose the financials on those two entities so that someone could buy them so that they could plug a hole. And then I realized the way that this is being structured, when Voyager just went straight into Chapter 11 because they had the financial systems and controls, was being treated differently. And so for me, that split, and again, that's a lump of craziness as well. Because remember how the custody business was created. It was created because Celsius illegally was selling securities to non-accredited US investors, and they decided to call it custody and just separate it without a custody license from what I can see. And just calling it custody doesn't mean it's compliant. And then those are all the non-accredited US investors where there was the most amount of misrepresentations. And if somebody bought that, you'd need disclosure on all of the regulatory issues that are happening in the main company. This is unethical. You got to, when investors are coming in, you got to have a level of, standards of what do they need to know in order to value those assets. Running a financial services company that grows to multi-billion dollars is very different to a tech startup where you can move fast and break things. And that's why all of these smart contracts and craziness happens, because you've got people that are incompetent at running financial services companies becoming multi-billion dollar, just thinking that regulations doesn't even exist and that it doesn't exist for a good reason.
People are asking about Nexo, guys. We don't know anything about that. Do you know something about? People are asking if funds are safe in Nexo.
I can't comment on Nexo because I've signed an NDA.
All right. Yeah, I think that was the main things we want to discuss. We have 10 more minutes. So, guys, please ask questions. And Simon, let's try to answer them in a more firing, small, short answers.
Yeah, basically, shut up, you blabbering idiot! Stop talking.
No, it's very good, but
I can't help it. But I'm gonna do fireside. Let's do it, Ivan. You're gonna be the first one that gets me to shut up and give a short answer.
Yeah, exactly. But also, I think after watching like a few AMAs, it is a bit of recap. But look, it's important with all the details that we've shared in this one, and also we've had just 20 minutes of the intro, so that's already a lot of AMA as is. So Simon, does it make any difference that they filed for bankruptcy in the US versus UK?
Not a lawyer, but yes, absolutely. UK bankruptcy proceedings would have led to cascading liquidations, disaster. And Chapter 11 is actually, from my experience, one of the best jurisdictions in order to, it's all focused on reorg and putting together a future. In other countries, you don't have that.
Should we still trust any kind of staking platform going forward, centralized?
You just need to understand the risks and manage those effectively. So, this is just a game of risk management. You shouldn't have your entire funds bet on one thing happening. And if you want to invest in staking and you want to go down that route, then diversify, do your diligence, but recognize you probably don't know shit. You can't audit the code and you're just taking a bunch of risk. So make sure that that's not your core stack and your core investment strategy, and put together a long-term 10-year plan that says I'll take 5% of my Bitcoin or something and speculate it like crazy. And if it blows up, it blows up.
When will we know the size of the hole?
I believe that that's a legal question, but I've estimated that it's approximately $1 billion from what I've seen so far. But that, a bit of the information has only come out today and I haven't got the NDA information. And at some stage I'll have to go under NDA. So I've been trying to educate as many people as possible before I can no longer educate and then everyone else takes over.
What is the timeline depositors can expect? Is it Mt. Gox, for example, it's, I don't know, 10 years soon. So is it something similar or what do you think?
No, Chapter 11 is designed to get out the, speed as a consideration. So that's why I was trying to get this as fast as possible, put together the industry players to make this an actual thing, because the longer it goes on, the more it costs. And then the more it costs, the less that can be recouped. So it's all designed to be a fairly speedy process. But yeah, there's going to be some bureaucracy, but we've got the best team to get through that bureaucracy.
This is an interesting one. Should I pay off the loans using locked collateral at the current higher prices or wait? Well, I guess the question is, in Celsius, you get this email, fill up your collateral. Is it just throwing money in a black hole? What do you think? Or should people just let it liquidate?
Unfortunately, if I answer that question, it would be financial advice and people would listen. Right. So there are consequences to both actions. And you need to get legal advice and financial advice and understand the different consequences. If I told you to do one thing and it worked against you, then that would be a problem.
Fair, totally fair. How much time do we have to? So guys, like we discussed, coins are partially gone. They're not there anymore, part of them. And we don't know the size of the hole fully. And the ways forward we discussed in this intro. So please go back and watch. We already discussed that. Let's see, is there a chance that Celsius might start monthly with limited withdrawals? Because they do have some balance sheet, but now with this bankruptcy proceeding, it's. Do you think this is possible at all or zero chance?
My understanding is that it has to be signed off by the committee, so that decision is yours now.
That's interesting. So, but how do you envision this? There are hundreds of thousands of depositors. So is it that everyone will get a letter and then vote and then send back? It's quite a tedious, long process if everyone will have to be part of this, right?
Yeah. So, we will find out. I'm sure things like this have been done before. You've got, major airlines with thousands of shareholders, hundreds of thousands and millions of shareholders that have been through this. So there's precedent for this. We just need to look to the market. I just haven't had the time to look at exactly how it is yet. My team's working away.
Right. What will Simon do for investors other than, well, what you're doing is that you're proposing a plan for recovery. That's what you've been doing for the past
I'm proposing a high risk, high return plan and putting it together so that you can decide whether it's good for you.
Do you think Alex will get criminally charged?
That's a lawyer question. Look, I'm just lawyers and the regulators are going to decide what to do. I'm just focused on the future.
Yeah. Well, we can answer this, guys. Can Alex be removed from management during Chapter 11?
Again, a lawyer question, but that absolutely must be done. But he needs to make sure that my guess is that there's lots of things that only he knows. So he's going to have to be involved in that process.
What court would take your proposal as a serious proposal in a reconstruction? Is it some public email address everyone is sending their proposals to? Is it that, do you know how it will be, or it's new for you, you're going to learn it along the way?
No, you need to demonstrate yourself as a serious player that can execute it in a timely fashion and can write a big check. If you can, then you approach the investment banks and the legal teams that are in charge of managing those processes, and they have an element of what they think is the fastest, what leads to the most amount of recovery, and the idea is to get it out of Chapter 11 in a timely fashion. There's a risk element to that as well. Only, I believe I saw a stat that only 10% get out, because that's why you've got to have a really effective plan. And it's got to demonstrate that it meets regulatory compliance. There has to be a business plan that says this can comply from day one. This can get out fast. This is how it, is best for creditors. And then creditors decide, and it has to get majority, and then the court decide whether it's actionable and legal.
People are asking, why did you withdraw all your funds? Because you became suspicious before they stopped withdrawals. But also, I think you answered. You said that then you would need to make it public and disclose as you're part of regulated company. But
yeah, two reasons. One, I was just literally out of the market when all this happened. Even if I was in the market, if you saw me moving my funds, I'm a materially, a conflict of interest person, and you would have to question the ethics of my types of actions, and I'd have to essentially create almost a run on the bank saying, I believe that people should, be taking their funds out. That's, I take my position very responsibly and very seriously. And I don't want to be involved in creating blockchain and database records of all the fraud that's been happening when they're telling people to buy tokens and dumping them on the market. It's not my game. There's money's too easy to make in this area to play around things like that. I've just been a simple Bitcoin buy, invest in equity, build the industry. Right. It's pretty simple.
Okay, finally, do you still have the 6 billion ready to go if it's a $1 billion hole? I think you said the 6 billion investment is conditional on the hole being 500 million. So this must be from some previous AMA, right? Do you have some updates on those statements?
Yeah, there's no guarantees. So I immediately went out to contacts that I could know write those checks. And those people said, if you can give me the information, this is the type of check I could write if these certain conditions could be made. So that is the Chapter 11 process. We've got liquidity. We've got the largest community, 150,000 investors that invested in all the major companies in the industry. I'm a shareholder in over 100 companies in the industry. And I know pretty much everyone who would be interested and be able to analyze such a risk. And I also said, but don't worry, you don't need to use our proposal. If you've got a better one, compete, because I'd like a better one if it's better for my deposit and my shares.
Yeah. People, by the way, are saying I have terrible audio. Sorry, guys. I haven't been streaming for months. I don't even know if my audio is good. Did you hear me well, Simon, during this interview, or something doesn't work?
It's pretty wrecked.
It's wrecked, damn.
But I can hear
it. Sorry, guys. Listen, we have to wrap up, unfortunately, here, 1:15. And any final words from you, Simon?
Yeah, I just want to say that prior to this, excuse me. Prior to this, I was in El Salvador, and there's a really interesting, amazing opportunity that we were working on. And that is the concept of Bitcoin as legal tender and securities and country sovereigns that are issuing bonds based upon a concept we created in 2014. We issued the first volcano-backed bond in Iceland, backed by Bitcoin mining. And now that was delayed in El Salvador. But here's what I think is really, really interesting. What if us, the community, could rescue this situation, create a Bitcoin investment bank that combines debt and equity in a time when there's hyperinflation, there's geopolitical warfare, there's reconstruction development needing to happen. I believe that there's a really big vision that we can have where countries put Bitcoin as legal tender, rebuild capital markets based upon pristine collateral, learning all the lessons from this shit show, and we could all benefit from that in a world where I believe that there are big geopolitical things right now. If you look at the three models, this will be my final word. You've got countries that are doing central bank digital currencies. You've got countries like El Salvador that are building on top of Bitcoin. And then you've got companies like FTX and billionaires that are going and saying, create a shitcoin for your country. The shitcoin's going to end the same way as Luna. The central bank digital currency is communism on a blockchain and Bitcoin is freedom. Let's get that out to as many countries as possible. And I think we can turn this situation into something that I believe could genuinely have a huge impact on a time when the fiat-based Ponzi scheme is causing mass destruction in the world.
And by the way, more practical. So let's say people want to be part of this. What you propose? How should they stay updated? Is it email? They're gonna get from email, a letter from lawyers, Twitter. How should they stay updated?
Yeah, go to so following me on Twitter at Simon Dixon Twit. My YouTube channel, I'll be giving updates. Simon Dixon. And we created a web page where you can share your proposals while we're proposing them, so you can give ideas as well, which is BnkToTheFuture.com/Celsius.
Perfect. Thanks, guys. And thanks, Simon. We're ending it right now. Smash the like. Better sound in the next one.